There is a lot of uncertainty. People also thought Britain is going to remain, but trends that are with us right now, about 270 odd trends, and they seem to suggest that Britain wants to exit the European Union. I first want to talk to you about the line that has been used, that this is the biggest global event since World War II. Would you say, and would you agree with that statement, or do you believe too much is being made out of it?
I'm not a great believer in hyperbole, and this sounds to me very much like that type of an exaggeration. It's a very important event, and it's an important event on multiple dimensions. First, I think for Europe it's a very important event because, as you know, since World War II, Europe has been moving towards integration, and this is really the first major move towards fragmentation of the European Union. So for Europe it's very important. Obviously for the United Kingdom it's very important, and we are seeing what's happening in the currency markets, and there's a real concern about growth in the UK going forward. But then for all of us globally as well, this is in fact a destabilizing event. It really is a situation where we are moving into a risk-off world, but in this risk-off world, India remains a haven of stability.
I will ask you about India remaining a haven of stability, and will our macros continue to be our alibis. But I must ask you a question. Till about yesterday, most polls suggested that Britain will perhaps overwhelmingly or marginally so vote to remain. Has the early trend of Brexit caught the government by surprise? Because it has caught most experts around the world by surprise, for sure.
No, we were prepared for both outcomes. We obviously did our contingency planning both for Brexit as well as for Remain. So we worked through both sets of outcomes, and you have to remember, as far as polling is concerned, this was a situation where you had a very close vote, and it seemed like that right from the beginning. And even at a 95% confidence level, you have a 4% margin of error. So it always was within that 4% margin of error. So really being able to predict whether we were going this way or that way, particularly in a bipolar election like this, was very difficult. So we remained prepared right from the outset for both outcomes.
So then must ask you a question, because I think markets would want to know, and you refer to the contingency plan in place. I'm not going to ask you the motherhood question of are you prepared or not, because I'm sure you've gone back to the drawing board and reviewed your cash positions, your forex positions, your export ties with UK and with Europe. But one wants to understand the specifics of the contingency plan that you have in place, because there is a lot of panic out there in the markets to know how safe are we, what is it that the government can do to intervene if there were to be a carnage.
In a situation like this, you always have to separate what happens, the knee-jerk reaction to play, if you will, with some of the more longer-term issues. As you have seen in the past week itself, we've really tried to once again emphasize that we are an open, market-oriented economy. We have once again re-emphasized the fact that we believe in macroeconomic stability. Our policy-making framework has real continuity, real momentum to it. These are some of the longer-term things to continue to ensure that India remains a very attractive country to invest in. Longer-term capital flows continue to come in. Now, the shorter-term issues over the next few days are the ones that we have to brace ourselves for, and that's where, of course, we have gone through these situations of volatility in the past as well, and so for that we are obviously prepared. We are monitoring the markets. We're going to make sure that there are smooth adjustments across the board. It's an orderly process, and of course we are in close touch with authorities around the world as well. So longer term, of course, we've been preparing for that, and in any case those represent our longer term policies. But shorter term, risk-off trades are happening right now. You've seen the sterling get hammered. Of course, the rupee is weakening as well as we get to a situation where you move to the safe haven currencies, USD, yen, and so on.
We've actually seen the British pound drop, what, 7% odd since I last checked, and one believes that the emerging market currencies will perhaps be at a more receiving end of all of that. You're right in saying that the government has taken many decisions, and you have sent a message to the international community that we are a safe haven. Come here, invest in us, and be in India. Do not, the risk-off cannot afford a flight of capital, so to say. But one will see that, because if the dollar were to rise the way it is, one will see that. My question is to get into more specifics. You did say that you're in touch with authorities around the world. But what about the government's own preparedness? I know your forex position is a lot better today, but a lot of people out there believe that the rupee, they're not as confident about the rupee as they were a fortnight back, and I'm not going to allude to events at the RBI or not, but the prowess to control the rupee had a lot to do with Governor Rajan, and I think there is a little bit of a sentiment shocker there. Would you help us understand your position on the rupee right now, and what is it that the government will do this morning?
Well, obviously Governor Rajan is an exceptional technocrat, but we have a very able set of technocrats in the Reserve Bank of India and across the government, and ultimately it's the political leadership, Supriya, that is accountable to the people.
Absolutely.
And the political leadership is still very much in charge, very much ensuring that the overall situation remains well in hand, and it is absolutely well in hand. We'll have to see how things play out today, but you know, the decision making really rests with the political leadership.
Oh, absolutely it does. And like you said, you were watching and monitoring market volatility. I think it was a very a very proactive move by the SEBI to also say they're going to do that late last evening. The RBI governor said that just about yesterday. But one would want to know, will the government be out there in the market? Will you get has LIC been told to come in if there were to be a shock wave of flights? I mean, one wants to know specifics at this stage because there is just so much of nervousness out there, and one would want to hear the narrative from North Block, so to say.
No, as we have said all along, and this has been a time-tested and proven approach, which is that, you know, markets will find their level, and really our role is to be able to ensure that, you know, the process is orderly, that we are obviously always looking for a situation where there aren't any systemic issues that have to be addressed, and those are the ones that we work on in terms of the systemic issues. As long as there is orderly adjustment, that's appropriate, and it should be, because expectations are being reset, prices will be reset. Now, while we go through that resetting process, that adjustment process, as long as we don't have, you know, systemic issues, that's really what we have to work towards.
The counter argument to this entire Brexit is that it is perhaps not going to be the end of the world. They still have 2 years to renegotiate terms of engagement. Do you believe if there were to be a Brexit, it looks like it is going to indeed be a reality, we are adding on to uncertain times that we live in?
No, you're exactly right, Supriya. I mean, as I said earlier, we are living in a very turbulent world. There are many risk factors out there. Apart from Brexit, we worry about global terrorism, we worry about turmoil in the Middle East, we worry about oil prices, we worry about financial shocks of various kinds. And this is clearly one of those. But, you know, that's really the world we've been in over the last 2 or 3 decades. I've lived through myself many of these situations. So, so we have to ensure that, as I said earlier, that we allow markets to adjust. There will be a market dislocation. We have to be prepared for that. We have to enable an orderly adjustment process. And thereafter, as I said, the longer term issues are to maintain an open, market-driven economy, to ensure that our institutions are strong, that the political leadership remains plugged in and accountable to the people, and is focused on the bottlenecks and the issues that really can hurt the economy in the long run. And we are entirely focused on that.
The fact that the political leadership is out at 9 in the morning talking about it, I think it should be a sentiment booster as well. But the other big factor and the other big fallout of a Brexit will be the FOMC. I mean, is Janet Yellen going to relent? Is she going to stay there? Is she going to hike rates or not? That's another uncertain factor that we are dealing with. How tough will it be to now read the Fed's mind at this stage? Because that again is a factor that decides our fates in markets and our fate in currency.
No, Supriya, I think in these situations you can't lose too much sleep trying to second guess other authorities. I mean, they will take into account volatility, they will take into account the risks and turbulence that they see, the overall risk of slower economic growth. All of that will be factored into their thinking. So let's wait for them to make up their minds. But as far as we are concerned, we do recognize, as I said, that we're going to go through a major market dislocation. We have to ensure an orderly adjustment process, but ultimately it's India's long-term competitiveness, its macroeconomic stability, and the quality of our political leadership that really will determine how things settle down.
If I may move the discussion away from equities and currencies for just a minute and talk about the pure play corporates that have their skin in the game in the UK. Many sectors, IT, consumers, auto ancillaries, I mean, I can go on and on, have a lot of exposure to the UK, and not just UK, because UK is their gateway to Europe, so to say. Has the government done a review of how impacted corporate India could be at this stage, and is there a planning of sorts there?
It's very hard to do that analysis, Supriya, right now, because you know that Brexit is going to be a very long drawn out process. At a minimum it's going to last 2 years, and it also depends on when Prime Minister Cameron initiates the whole process.
That's right.
So we will have a fair amount of time to really prepare for it, number one, and number two, the basis on which they exit and what their trade arrangements are going to be, those are very hard to predict right now. So we're going to have to wait and see. There's plenty of time for that to play itself out. So as far as the impact on India in terms of trade with the UK, trade with Europe is concerned, I think it's too early to call that. But again, as I said, there is going to be a market dislocation, and that's really the part we need to focus on right now.
Actually, that is one of the factors that's worrying markets. We have FTAs with Europe. Are we going to go back to the drawing board as far as trade ties with the UK and the European Union is concerned? Because UK is one of our fewer partners where we have a trade surplus with, and those are things that are worrying the markets, and which is why I want to ask you, has the government thought of a trade tie with that region with the possibility of a Brexit?
No, of course we've thought through that. I mean, as you know, we are in a process right now where we are reviewing all of our trading arrangements. The Chief Economic Advisor has been looking at that. Honorable Commerce Minister has been looking at that. So Brexit, how we work with UK going forward in such a situation, all of that has been considered. But again, what we recognize from that whole process is that it's too early to tell. Brexit is going to take time, and so we have to really watch and see what happens. Now you have to remember, for the UK as well right now, if indeed the vote sort of materializes the way the trends indicate, they are going to be in a very inward looking mode for quite a while.
True.
And so they may even be less outward oriented than we would expect, because they really have to come to terms with all of this and what their relationship with Europe is going to be. You have to remember that UK is a European country, and resetting those relationships is going to take them quite a bit of time to figure out.
Because you've been candid enough to admit that there is going to be market dislocation, I want you to be candid once again on a macro level. Is a Brexit going to change your macro math, whether it's growth, whether it's export projections, all of that put together? Is your macro math going to change as well?
We'll have to see on that, Supriya. I think what we anticipate first and foremost, as we did our contingency planning, is that we are going to see changes as far as currencies are concerned and the currency regimes around the world right now. That's really the short-term impact.